Let's move now to the eNCA Money Desk. Rofhiwa Madzena joins us in studio. Hi, Rofhiwa. You're taking a look at the rand, which has had some really dramatic falls today in the territory of lowest levels ever against the US dollar, even the British pound. And it's not just about the economic environment. This is, it seems, very much about what happened between Russia and South Africa and those startling allegations that the US ambassador made today.
That's right, Sally. Very worrying developments indeed. And let's just take a look at what it fell by today. It went to 19 Rand 30 cents against the US dollar at some point today. So it crashed to its previous record in intra-low trading today. It's lost more than 30 cents of its value against the dollar. So let's take a look at some of those contributing factors. The big story that came through here today was the US ambassador's press briefing, where he indicated that he was confident that there were weapons that went from South Africa to Russia. And of course, this could impact the trade relations between South Africa and the US. Why is this important? Because we've got the AGOA Act that's currently in place, and that was put in place there to advance the economic growth of Southern African countries, including South Africa. But that goes with the certain conditions, including economic and political governance, which of course is determined between both Southern Africa and of course the United States, and of course the United States being worried about the Russian relationship between South Africa and Russia, and of course always saying that they remain mum on the war with Ukraine. So, but it's also slipping for another amount of reasons. So we've seen that there's a stronger dollar that's at play here, but also the electricity crisis, and we're seeing increasingly that the plan that's been put in place by government is not one that investors have much confidence in at the moment. And then of course we've got the direct implication that would be on consumers in this regard, and you're seeing there that there will be continued stubborn inflation. What does that mean? Well, it means that we're going to continue seeing higher interest rates hikes from the Reserve Bank. Many anticipated that we'd be seeing about 25 basis points in 2 weeks when they make their announcement. That might be 50 basis points if the rand continues on this path. And then of course it deters foreign investment. How so? Well, investors in South Africa want to make money in obviously revenue, and they can't do this with a weaker rand because the value of the profits that they will be getting in the rand won't be conducive to their businesses or their growth, or rather reinvesting in the country's economy. Let's bring in Peter Attard Montalto, who is the Managing Director, Global Lead and Capital Markets at Intellidex. Thank you very much for joining us this evening, Peter. Let's start with that very worry that sent the rand plunging to around 19 Rand 30 against the US dollar. Trade relations between South Africa and the United States, huge concerns that amounted from the revelation about our relationship with Russia. What is your initial assessment?
Good evening. Well, there's been brewing concern about foreign policy in general from investors since the start of the Russia-Ukraine war, now well over a year ago. And there's been a very strong sense, I think, of a souring of the impressions from both sides of the aisle, actually, in the US about South Africa acting outside of the US's national interests and strategic interests globally. And this has obviously culminated in increasing chatter from the US embassy, resulting obviously in today's press conference. But this has not suddenly come out of nowhere. I think this is a long train of worry from the US. We saw that in terms of Treasury Secretary Janet Yellen's visit in the year, where she delivered some very tough love to the US government, the UK government, South African government, in terms of money laundering, in terms of terrorist financing, in terms of just energy transition as well. And so, yes, I think this is just a continuation of a trend. But now investors are worrying, in particular, about the economic implications of this, as you say, from AGOA, but also just a general cutting off of cooperation, of aid and other forms of funding as well.
And what would that do to South Africa's economy, Peter? Because already people are talking about things like sanctions and all sorts of other implications that you've just described there. Just on an economy that's already as fragile as South Africa's economy is, what would this do?
So I mean, there are a range of different supports that the US obviously provides into South Africa. The most important of which, is, of course, is AGOA. It's about $2.7 billion of exports per year. It's about 0.8% of GDP. Now, there's a review cycle for that coming up. That would take a relatively long amount of time before you could necessarily see an impact on that. But it is a possibility, as you laid out in your introduction. But there's also a lot of US aid that flows into South Africa. There's a lot of technical support that flows into South Africa as well from the US. And we shouldn't underestimate the positive impact that that currently has and the detrimental impact that cutting it off. This is a sort of capacitation of various reform issues, various supports, various government entities in South Africa to help support institutions. So there are a range of different impacts. I mean, at the most extreme end of the spectrum, of course, you have things like sanctions. I think we should say that is still some way off. I don't expect that to happen straight away. The big problem, I think, for investors here is looking forwards. The key part, actually, of the ambassador's address today was about the fact that the US no longer believes that South Africa is non-aligned. I don't think anyone really believes that South Africa is non-aligned for some time. Investors certainly don't believe South Africa has non-aligned status at all. And it's the implications of going down that route and of choosing basically Russia that will have more dramatic implications in the future. Potentially, if you go down that route, which may be down the road could include sanctions, but I don't think we'll see that yet. And so I'm not expecting certainly a dramatic pullout of US companies or anything like that. I think some expectations this afternoon on that sort of front have got ahead of themselves.
And it couldn't have come at a worse time, Peter, because while the president is saying we'll look into it, there were commitments made between the South African government and the US government about investment into South Africa's energy space and getting us out of the energy crisis. That is also now at risk. And that in itself, the energy crisis that we're currently experiencing, is probably the biggest risk to South Africa at the moment. And we might be losing an opportunity here to have it remedied with the kind of resources that the US could supply here.
Well, the Just Energy Transition Partnership has been in trouble for some time, of which the US is only one component. The problems that we've seen around utterances from the electricity minister around decommissioning schedules has only been the most recent part of that. There have been problems, through the second half of last year already, and that actually led partly to Treasury Secretary Yellen's visit and some of the tough conversations she had around the Just Energy Transition Partnership. So this isn't a new problem necessarily on that front, but you're right, it does reinforce the problems of getting money to support things like the transition if you're viewed as being counter to a country you're wanting money from their strategic interests. And I think there will be many other countries in the JTP that will be having similar sorts of discussions on these sorts of fronts as well. But the sell-off in the currency today, let's not forget, was a culmination of several days sell-off, which have been particularly focused around blackout risk and around fiscal risk as well. And markets have really been weighing on, maybe too much so, but have really been thinking on maybe the lack of preparedness and planning that has gone into blackout potential. Even though it's a low probability event in future, would be of a very, very severe impact.
Thank you very much for those insights. Peter Attard Montalto is the Managing Director and Global Lead for Capital Markets and the Political Economy and at Intellidex, joining us for that discussion this evening. With that